All right, let's go ahead and get started. This is Jeff Scott, and welcome to this weekend's webinar. Where did I put my PowerPoint? Let's see if I can find it here. All right, today is February 23rd. It's a little bit after 5 p.m. and try and get this in before my wife starts to yank me for dessert. I've got my internet Windows on another computer, but just for the heck of it, let's take a look and see if I can see what the futures are doing. Bring this over here. Very quickly, let's just take a look at CNBC.com. This is a week that I'm a little bit nervous, which we'll talk about. And actually, I took some protection last week. So right now, these are going back 5/14 on Friday. So today's futures are not out yet, so essentially a non-issue right now. And let me go ahead and let's do slideshow mode from current slide, and then let's switch it. There we go. All right, so I entitled today S&P 500 at resistance, breakout, or pause to refresh, and I probably should have put or fall. And I think we'll see that we're at sort of a critical point, which seems to be the way we are frequently. Disclaimer, this is for education purposes only. I'm a doctor, not a broker. Most physicians lose money with their investments. And I am not affiliated with any software vendor or trading company. The tools I demonstrate are those that I use in my daily trading, and I have paid for all the tools that I use. I want to, first of all, thank everybody who came to my meeting in New York. We had a great time. I think that I went over the top on the food, according to what people have told me, but what the heck. We went to Capitol Grill on Friday night, and my wife just did an outstanding job at catering on Saturday and Sunday, Carnegie Deli and bagels. So it was fun, and we'll look forward to doing it again some other time, but probably down here in Florida in the wintertime, not up in New York City. The next PV meeting, as you can see, is March 29th. I'll be there, as will George Lee and many others. And you know, don't know how many more this guy here, Ian's going to do. And if you've not been to one, it's really he's really a treasure. Ron's a great partner of his, and it'll be a great time. And it'll be a little different this year, as we're going to be live in the market trading all day on Monday. I'm not a guru. That's something that I heard from Ian with his British voice years ago. He wants to teach you to be your own guru, and I totally agree with that. Here's Ian and Ron, and yes, he is a guru, but we won't tell him that because he doesn't want to be one. But whether it's O'Neill, his disciples of Morales and Catcher, Alexander Elder, who I'll be going to his Spectre reunion in May, looking forward to that. Whether it's Van Tharp on position sizing, on calling, and Pascal Willane look at the impact of volume. Stephen Bigelow is my candlestick guy. Mark Minervini, CanSlim guy, great trader, just finished his book, excellent book. Ronald Gronke's about how to make income purely, and it's about covered calls and selling naked puts. I have a lot of things on my computer. I forgot to turn down my icons, but just suffice it to say, I need something to trade real on, and I need something for end-of-day analysis. I use HGSI, I use EdgeRater, as you'll see. I use Magenta for seasonality and MarketSmith. Thinkorswim, the good news is they did an update today. Bad news is I couldn't get my scans to work. I know some other people have the same problem, so hopefully that'll be fixed, or maybe it's already fixed. Always want to know where you are in the cycle, and my feeling is, well, first of all, this is stage 2. This is when you want to buy. This is stage 4 when you want to sell. Stage 1 and stage 3 look the same because it's kind of a Darvas box going sideways. Stage 3 is what you would have as you transition from a markup to markdown, and stage 1 from a markdown to a markup. Now, what we've been going through is sort of a period where we seem to be going into stage 3 and then we take off again, and that's been the market since November of 2012. We're there again, and we're at that point where we either go higher, or I think there's a high chance that we'll probably pause here. I'll show you 2 graphs that make me not too bearish, but when we look at the charts, there is some reason perhaps to be a little bit bearish. Here's one reason not to be bearish. This is the canaries. As you can see, it's price line: Apple, Amazon, Google, Tesla, Facebook, LinkedIn, and Netflix. Sort of the canaries in the coal mine that Ian uses to get a sense of what the market is doing. And one thing that you can see is that, wouldn't you like to own these back in June, and watching them double between June and now, so in 10 months or so? Everything is green, certainly lower left, upper right. Reasons to be concerned are we're stalling here at a couple of red candle highs, and you can see at the high jump a red candle high, and that's always worrisome. So when I see the high jump bar, meaning where it's extended as we've been over the last year, and we have a somewhat ugly day on Friday with a red candle high, I think there's enough reason there to be a little bit concerned, but I've said that before and we've gone higher. The LLURs, on the other hand, this is a list of stocks that we put together, potential leaders back in October. Now, wouldn't you like to have been at that meeting in October and just bought all these stocks? It traded down after our meeting for a couple of days, and then it just took off. And this list of great stocks as well. AeroCap is one that moved a lot this week. Activist has been a huge move. Valiant, Delta Airlines. One of the things that we do at the HGSI meeting is we pick this list of stocks, and we use the list of stocks to give you a broad-based in the market, no more than 2 stocks per sector, 15 to 30 stocks, and we make our own index out of them, Facebook, among others, and then as long as this is in an uptrend, we feel comfortable being in the market. I'm a little concerned because we are at the high jump, which is a natural place to see a reversal, and this is the most extended we are since we did the list. And if you look at where the high jump is, it's taking the closing price and taking 3 numbers and summing them. The first number would be the difference between the closing price at 220 and the 2-day moving average at 150, so that would be 70. 220 minus the 180 of the 50, which is 40, that's 11, or 110 rather, and then 220 minus the 195, so that's another 25. You add that together and you plot it, and you look to see how you compare to previous extension. And when you get the highest that you've been extended for the year, you should be prepared to see at least a pause to refresh. Now on to the charts. So I can do here, close that down. Let's just quickly take a look at my elder charts in TradeStation. I am going to make my indicators available. I am thinking $500, which would be a little bit more than the delta was for the people that came to the meeting. But I would assure you at $500 they are a great deal, and they will include green candle lows, red candle highs. My version of the pocket pivots actually should go to one that actually has those. It will include green candle lows, red candle highs, ISO failures, squeeze, no-go breakouts, no-go breakdowns from the squeeze, Bible gap ups, and then my pocket pivots here, which are up and down, although down has not been validated. They also can be printed or can be on a chart where I have included Bible gap ups, high jumps, which I'll also include in this deal, logo breakouts, breakdowns, pocket pivots. This is one you'll have to buy, which is sort of the MOBO bands, but you can create your own MOBO bands. The other thing that's kind of cool is I created a series of dots, and so just like I use in HGSI, you can get an idea of what is firing, and of course you'd have to really open up the little thing here, which I'll try to drag back in here. There it goes. And it tells you that the first dot, which is at 7, which didn't fire, is the Bible gap up. This is a pocket pivot. The next one dot down is a MOGO breakout. Then you have a squeeze, which isn't occurring. It's occurring over here on the weekly. Then you have a PSAR, parabolic stop and reverse. Then you get down to red candle highs and green candle lows. And then you get to Kahuna Forest, and obviously you want to see a lot of green. The way that I use my high jump is I'm actually looking back 200, same formula to create this, but we're looking back 200 days. So if you're interested, it's everything I've showed you, including the workspace. That'll have charting and radar screens and a little bit of instruction, and it'll be $500 via PayPal. Email me if you have interest. The reason why I went here was to look at the elder charts, and I like to look at the Dow and the S&P and the NASDAQ. Let's start with the Dow. And you can see the Dow is bounced between blue and green, getting up top, near the top of the upper envelope. Good news here is there's no real MACD divergence, as it's actually getting a higher on the histogram than it did on the prior high, although it's not at a high yet. And we'll hopefully see that the lines pull up with it. High jump at 57, green on the weekly, blue on the month. So the Dow, which is actually one of the weaker of the indices, certainly is in a neutral to positive range. The S&P 500, up at the top of the auto envelope here, and it too, as it's hitting near a new high, it is getting a higher histogram. The lines are lagging, but no divergence there. And then the NASDAQ, which is the strength of the market, as you can see up at the auto envelope, blue for the daily, green for the weekly, and green for the monthly, and higher highs here, and going to be higher highs on the line. So from a market perspective, we continue to chug along. The fact that we're up at the upper envelope in blue pretty much across the board, it makes me a little bit aware of risk. But this market still can go whatever way it wants to go. When I look at my radar screen, and I put together a large group of stocks, I'm able to see which stocks had Bible gap ups. And there were a lot of Bible gap ups on Friday. Some of them actually, by the time the day ended, they had some issues like Techmira. They announced the secondary, which is how do you kill a stock that's in a nice move as you put a secondary on. So let's move this out, and let's go into HGSI. Now I've changed my resolution, which means I guess I'll also have to change everything's going to come up too big or too small. So I start my warehouse view. And let me see if I can make this good. I've toned down the resolution because it's above 1920 by 1080. It just doesn't record well. And when I convert it to something you can use, it just destroys it. So the first thing I want to do is go into Woodward and Brown user groups and Major Markets Plus top-down view, which is all technical but looks out over a couple of weeks. And I can see the strength of the market, gold and silver, no surprise, NASDAQ, small caps, and the NYC composite, which is a mixture. The weakness of the market are the big stocks, the S&P and NASDAQ 170s and the S&P 500. So small stocks, HGSI type stocks continue to do well. If we look at the 5-day performance, which is actually not exactly what we did for the week because it was only 4 days, but going Friday to Friday, you could see that the leader has been the silver at 6%. Volatility's come up a lot. And if you look at the major indices, the S&P 500 was up 0.4, the 1500 is up 0.4, the NASDAQ up 0.5. So over the last week, nothing really has been outstanding, stand out among the indices. The small stocks up a little bit more. But gold and silver certainly had a good week, and silver continues to lead that performance. You know, I like to jump in. Let's take a look at the majors. We'll spend a few minutes on the S&P 500, which I've already marked up a little bit. And you can see here in the S&P 500, let me make it smaller, start with, that the market had the last low, the green candle low back here were mine. And thanks to Jim Cooper for telling me to use a bigger pointer. I actually find that's helpful anyways. You could see mid-November 2012 was when we hit a low. We've had a nice steady move up. Each one of these highs I'm not a great writer, but each one of these highs has taken out the prior high. Until now, and let's highlight where we're at right now, and this is part of why I'm a little bit concerned here. We've got a single top, a double top, and a triple top in the S&P 500. If we don't quickly get above this red line, then where are we likely to fall? Well, it would be nice if we bounce back and forth between the 8-day exponential and this line. I doubt that will happen. Perhaps we pull down to the 50, which would just be about a 30-point, 25-point reduction from where we're at, which I don't think would be a big deal. In fact, it would probably be that pause to refresh that I defined. So let me just see what that number would be. Our close is 1836. The 200-day is at, excuse me, the 50-day is at 1814. So that would be 36 to 14, a 22-point fall, which would just be about 1.5% from here. That would be optimistic, folks. I think a bigger risk is we go back and we retest these lows. If we fail here, I'm afraid we retest back down here. And I drew the line here as our first line of defense because this line matches up with the low over here, and the low over here was 1746. So that would be about a 100-point drop. That will be painful. The next line that I drew, which might be the more likely target if we have much of a sell-off, will be the ascending 200-day moving average, and it will be when it's sort of, when I go back further, this was an area of prior resistance. So we could pull back to the 1730, 1740 range, which would be a 100-point pullback. Now, I'm enough concerned about that I bought some contras up during the week and lightened up some of my margin on Friday. The optimistic is we go right through this. Probably the neutral is that we don't get, and that's probably only an 8% pullback, by the way, which is, as we keep saying, we're overdue something up to 8%. Most likely we pull back to the 50 as we had in the past, but the last pullback was a little bit tougher, so I'm kind of thinking we're going to have a little bit more of a pullback here, and that's why I took some protection. So that's the S&P 500. The weakest is the Dow. 30 stocks that matter so much, I guess, in someone's mind. And you can see they had a pocket pivot down on Friday, and way below the previous high. If I look at the NASDAQ, unlike the prior two, this is a time when the secondaries of the NASDAQ, the smaller stocks, are actually leading. And I drew this last week as sort of a point that we had to break out. And that was on Monday, which the market was closed. And you could see Tuesday we broke above it. We held above it for the week. So the NASDAQ looks stronger. But I'm afraid of the S&P 500 and the Dow rollover. It's hard for me to believe that the NASDAQ will be healthy. What is healthy? Gold did exactly what I wanted to do. It broke above the 50. retested and held, broke above the 200, retested and held, and I would think right now gold has now gone from a bearish to a much more bullish posture, and I've started loading up on gold. Silver, I made a call, 2 weeks ago, and so I thought it was acting stronger. It looks just like gold, except it didn't really retest, and it's a little bit higher off its 200. It also, I would say, has changed its posture to a much more bullish phase. If we look at the dollar, continues to be well below the 200-day moving average, and until it breaks above that, the dollar is going to be a non-issue. Weak dollar, good for commodity pricing, also is good for people that export product. And then lastly, volatility. And you can see on Friday, volatility had a big bottoming tail day. And perhaps that should be enough to make me a little bit concerned. And it was, and that's when it came back up, I bought some I bought some VXX, some contra to the VIX futures, to the VIX. So we'll see. I think we're not without risk. Now, we also know from last week's discussion that we make money either when the VIX is basically doing nothing or when the VIX is falling, and we lose money when the VIX is rising. I think we're at risk to see a rising VIX this week. And the VIX, I remember once we used to think that 20 was not a big spike. But 20, I guess, is the old new 40 because it used to spike up into the 40s. Now that's where pain is, 11, 10, 2009. So that's not even that far back. And you can see where we're at. Whoops, I hit the wrong thing. I'm sorry. And now we can't get above this 200 weekly moving average or 1,000 days if it spikes us. So if you're bullish, as long as we stay below that line, you can be pretty happy. I'm a realist, and I think that I don't think we're out of any woods at this point. Let's just put it that way into the weekly. All right, let's look at oil real quick. Oil has topped up above 100 and held. And let me get some more. So for me to have been happy with oil, I wanted to see it stay above this 200. It's at the top of its Bollinger Band, so perhaps a place that might be likely to pull back. But if it holds at this 200, we may see higher oil prices ahead. And then with the cold air that's been hitting the Northeast, you all know that natural gas has been on a tear. From a industry perspective, $145 industries, and the top industry is force up. Now it's interesting, as I say, this is a flawed way of doing it. It's the best way of seeing what's moving right now, but it's too heavily weighted on volume. In case in point, a week ago, biotech was the top of the negative list. It gets to the top because of the volume traded. Last week was a nuts week when it came to biotech. I made a lot of money on Wednesday or Thursday on a little stock called Microvision that went up over 100% in a single day because of news, and it was slow enough to develop that you actually could get into it after it moved about 20% and then ride it the rest of the day. A lot of biotech things were weird. You can see over the last 5 days, biotech has been up 6%, and this includes the fact that biotech did not have a good Friday last week, which is included there. So as always, I right-click on the blue. I change the index group. I'll comment on some of these because they probably are worth it. All right, let me make this the right size. Well, it's not an issue with HGSI, it's an issue with my computer. The fact that I changed my resolution so much for this broadcast means everything comes in a different size. And then when I'm done and I switch back to my regular resolution, everything's going to be teeny weeny. Here's ISIS Pharmaceuticals. Kind of looks like the S&P 500. It's just been in a massive uptrend for quite some time, and it broke out on Friday. a big move. At one point, it was up $9 on the day. Certainly, it's something to look at. Bible gap up rules. If you can get in, close to where it closed, you're not perhaps too far up for your stops. So you had a mobile breakup from a squeeze. And if you haven't been on the last couple of calls, mobile breakout is now included in your latest download, as is the squeeze. My charting views will come out hopefully by next week, Tuesday, when I do a program as a add-on. Everything is green, kahuna, tons of volume. You always get a little bit nervous when you chase something like that, although if you follow Morales and Katcher's Bible gap up rules, it's not unreasonable. Personally, I'm going to wait and see if it comes in a little bit. It came in a little bit during the day, but what a powerful move. Pharmacyclics, this has been a fan. I've been a fan of this guy for a long time. This is a stock that many of you know we've talked about enough on this call. That used to be a very cheap stock, and then around December of 2012 is when it became clear that their drug really was, actually 2011 that their drug worked. In 12, we got to thinking about the drug being launched, and it was launched late last year, and you can see the power move that they've had. It continues to do well because they continue to expand their indications. There's probably also an opportunity for a buyout by J&J. Acadia Pharmaceuticals had a huge run-up until October. It's sort of been dead for the better part of 4 or 5 months. There's probably a name for this type of a pattern, but to me it's a major breakout off a stock that's been basing. You had a kahuna, tons of volume, everything's green, and a mobile breakout. Again, like ISIS, you'll have to use your own sense of whether it's too far gone or not, but I think both of these are working and likely can go higher. Biogen IDEC, probably the star of biotech, and I'm really proud that I actually put a buy-in back when it pulled into the 50 on one of these calls. Problem here is it's had a long run, it's extended, it's near the top of the high jump bar. That said, I bet it goes higher. They're the king of the orphan drugs with high prices. Obviously a leader, I'd rather buy it on a pullback. There's the index, so below the index, what do we have? Celldex is another one that I think looks impressive. It's one that had a huge run-up. They got an oncology portfolio. They sold off hard. Every time biotech corrects, this stock, NPSP, all these things get hit hard. And it had a big move breaking through the Bollinger Band on Friday. On everything is green. A little bit less extended than some of the others that I pointed out to you, and I think that one is a buy. Myriad has had a great run, and it's obviously very extended and had a bit of a shooting star on Friday, so I'd probably have to let that one come in before I'd spend much time. IDERA is another interesting potential swing trade. Pull back, ran up, so sort of a cup and a handle, and a breakout with a kahuna. Everything is green. Mobile breakout and a squeeze on Thursday and broke out further on Friday. Potentially viable. You can see the strength in biotech because how many good charts can you look at in one place? Newlink, probably too far gone. It was an $18 stock. Now it's almost a $50 stock in the matter of 2 months. But what a huge move. A little bit of a pause. Running again. This is when you start to get a little nervous. Doesn't make any money. It's had a big run already. But right now, these are what's working. Zoma, a lower price stock, pulled back to the 50. And then on Friday, had a big move off the 50 with the kahunas on Thursday and Friday. And I've been around this game long enough. When I see multiple kahunas, a mobile breakout from a squeeze, everything's starting to turn green off the support. Zoma looks kind of interesting. Ariad, one that we talked about a lot on this call, sort of a slow move up. Nothing that exciting. There were a couple of reports about potential takeovers. All I know is they've got a marketed product in the EU and in the U.S. As an oncologist or cancer physician, I can tell you that we love the drug. And it went off the market here, came back on the market here, which was the fastest I saw a turnaround. And the EU approved it at the same time. I think the stock continues to go up in a slow, steady move. So we can go all day long on these. Carix is one that looks like it's breaking out. Sort of in a slow uptrend. It pulled back, broke out on Friday. Thursday had a mobile breakout from a squeeze, was up again on Friday. BCRX, BioCrest is another one that I'm in that I like as well. Pull back, didn't quite get to the 50, breaking out here. It's now at resistance, going back multiple years, and a couple kahunas, everything is green, so it's probably a little late to get into that one. So no question why biotech is up on top. Biotech is hot right now. The next group, I believe, was pharma. So let's take a look at what's leading the way there. So Forest Labs is a takeout, no reason to look at that. Activist has been one of my favorites for ages, and so not a whole lot to say there except it keeps getting more expensive. It's expensive. It's at the top of the tide jump here. Had a Bible gap up after a long run. You know, it probably goes higher, but it's not without risk here. So if you don't own it, it's probably too late. Merck is one of the leaders of the old big box companies. Nice run up here. They've got a nice oncology portfolio that's making some good news. They probably pay about 3.5% dividend. Let's see, 3.1% dividend. Other things in big pharma land or in pharma land. Somebody on the board, I think Bruce Brotov, asked me what I thought would be the next Jazz. Well, I was wrong. I put Forest Pharmaceuticals, and you know, I was wrong, but it was a great way to make money. It was one that I was in, and boom. So it went from, he asked about 65 to 95, but it was because of the takeout. I know that Bruce is in Salix, and I think that Salix, based upon its out years earnings per share, it's a potential one. Now, why do I say that based on its out years earnings per share? So I got everything set up for you today here. Oh, let's see if I can make this work here. Nope. All right, let me bring it back here. I just hate changing my resolution. That's what causes these issues. But you guys are paying the big bucks to be here, so I want to make it right. I know no one's paying for it. I'm joking. So I wanted to look here at SLXP, and you can see, look at this earnings per share coming into the stock. If it keeps its multiple of 30, and it makes $6 in 2014 among friends, 30 times 6 is 180. Even if the multiple drops, why would it drop when you have 85% growth? I think the stock is way undervalued, and that might be my choice for a big mover this year. So we'll see. Anything else that I thought was interesting? Questcor just keeps on going, as does Valiant, and Jazz keeps on moving. At some point, these guys are going to give it up, but until that happens, they continue to be cha-cha-cha hot stocks. And you know, it's not an expensive stock. It's $9.8 billion, considering they got a marketable portfolio. They keep acquiring companies, and they have the Irish tax rate, which is very small. All right, so that's two groups. Let's see what the third group shows us. Drug retailers, as I said before, probably a big winner in Obamacare because more people will be buying prescriptions. And like distributors, McKesson, Cardinal, ABC, they do well on generics. Rite Aid, we've watched all the way up, sort of gave us a little, I don't say it's a cup and a handle, but gave us a scoop here. And running again, everything is green, cheap stock. Leader of the group is probably Walgreens, which you can't tell whether it wants to be a distributor or a retail chain, but it's really consolidating vertically and running off of its 200, starting to get extended already, but a nice run over the last week or so. So drug retail looks strong. To like the Rite Aid chart, probably more. I like Walgreens more as a company. Specialty stores. So you have a lot of buyouts in here, and number 4 is probably the one that I think is most interesting. So let's work through the top 4 very quickly. Zales is being bought by Signet, so forget them. Signet had a big gap up and a run up here. Probably wouldn't touch them right now. They're very extended. Barnes & Noble's got an offering at $20 or so for 51% of the company. And then you got this guy. This is one that I own that had a huge move here with a kahuna and volume coming in that woke me up back in December. AeroCap Holdings. And then they had a Bible gap up on earnings. went sideways, had earnings come out here, and first interpreted poorly and brought it back towards the 50. It closed high, which I guess is called a belt hold, and gapped up again on Friday. Everything is green. I think this one goes higher, up to $60. Kahuna, tons of volume. I like that one a lot. A lot of buyouts driving this industry up. Next one on the first one up is healthcare facilities. So these are a lot of REITs, but I want to go down to ZLTQ. So we've got Emeritus, which I think is being acquired as a senior living place. We have Brookdale, who's acquiring Emeritus, so we're still in this game, but at least initially, those that buy companies go up just like those that are acquired. Capital Senior Living, gapped up, probably in relationship to the news. Lots of volume in a Kahuna, viable gap up. Those don't excite me. This one does. So Zeltec Aesthetics Health is an electromedical and electrotherapeutic apparatus. It's a med tech company. Reduction of unwanted fat tissue. Oh, I could use that. Sells to dermatologists, plastic surgeons, and aesthetic specialists. So it's more of a medical technology play than facilities. Why do I like it? Well, it's not because of what's up here. Because it pulled back to the 50 and had a mogul breakup from a squeeze, a Kahuna, and a bounce off the 50. I'm buying that one on Monday unless the market is rolling over. And it's pretty easy for me to tell you what I'm going to do. It's not rocket scientist here. For me to buy it, it's going to have to probably take out the high of the day, whatever that was. And then I'm going to put my stop right around the low of the day. So I'm not really putting a lot at risk here. I'm risking about a buck and a half. And bottom line is, if it takes out the low of the day, it means it took out the 50. So my reason for buying it off the 50 failed. And if the market opens down, then it will never take out the high of the day. So I'm very interested in Zeltec for tomorrow if the market holds up. All right, I'm going to try and pick it up here because pretty soon I got to go make some chicken. Because down here in Florida, it's 80 degrees and sunny right now. Other diversified financials. These are strange financials. And I don't really think that many of them are actually viable. This one, let's open this guy up. This is I think this is one of these companies that does reverse mortgages. JGWPT Holdings, JGW. This is structured settlement payment purchases, annuity payment purchases, lottery payment purchases, and pre-settlement funding, JG Wentworth and Peachtree Bands. All right, so if you just made a lot of money and it's paid out over a number of years, they'll give you some discounted cash value, so they have very little risk of getting repaid. Interesting chart. It's an IPO, obviously, pulled back hard, had a big day on Friday. I might want to do some research and figure out what happened because it's kind of an interesting looking chart. It's certainly not on the basis of its earnings or its dividend play, although it does look like it makes money. Don't know much about any of that group, so we'll continue. Internet retailer, Priceline. I mean, there's so many things here. I don't want to basically throw out a question mark while we're here. So Priceline is great. I just make money on this by selling puts nakedly because, I mean, you can probably even make money on puts below the 50-day moving average, but you make it on selling puts because this thing just never goes down. Now, saying that, it will probably go down, but Priceline, clearly a leader. What are its earnings? So I could do several things to get earnings. I can get them out of MarketSmith, so I've got that on my other screen. Priceline earnings they're out. They came out so they're out May 9th is when they get their earnings. See, it says right down here. All right, so that's Priceline. All right, the one I wanted to look at was this guy. What do you do with this company? They basically, great earnings per share growth coming in. It's an internet play. They put people's stock photos on, and then you can buy the rights to use the photos. That's what they sell. It's an online setup. What a beautiful chart, lower left, upper right, pretty tight, had a Bible gap up off the 20, out of the squeeze, everything is green, kahuna, tons of volume. If I had no idea what they did, I'd be buying that chart. I just don't get it. Maybe somebody out there listening to me knows the company and can tell me why it's worth $100 a share. I didn't show you Facebook. It continues to do well. Communications equipment. There's a lot of talk about Juniper being a potential takeout candidate. You know, it ran up, went sideways. Kahuna, pocket pivots the last 2 days. Everything is green. Mobile breakout. I think it's viable where it's at. If it gets taken out, great. If not, it's got some nice earnings coming in the out years. So that might be one to take a look at. CommScope Holdings, big gap up, I think, on earnings on that came out this week. Kahuna, pocket pivot the day before, might be something to take a look at. It's got great earnings per share growth. It's just a new issue I don't know anything about. Nokia is the candidate to potentially purchase Juniper. That's probably not helping their stock. Ubiquity is at their high of all time, a nice networking play, great earnings per share growth, starting to get a little bit extended, long in the tooth. All right, that's good enough. I'm starting to feel long in the tooth myself, so not too much longer. Airlines, I've been talking about these a lot. There's a lot of good ones. Let's just go through real quickly, and I'll give you my thoughts about each chart. I own Delta and Spirit now. American Airlines, ever since their deal was approved, nice steady uptrend. Probably going to be bumpy for a while when they do their consolidation, but a leader. Nonetheless, Spirit went sideways on the 50, took off this week after Kahuna pocket pivots. Everything is green. Love their numbers. Delta, don't love their numbers as much going forward, although their earnings are pretty strong. Buying it off the 50 as well. Mobile breakout from a squeeze on Thursday with a Kahuna. Looks damn good, excuse my French. United Holdings pulled back. I'm not as happy with this. Maybe it's this minus 57 that bothers me. Southwest Airlines breaking out to all-time highs. So pick one or two. I think airlines are now investment quality, where for a long time they were how to lose your money, different than Vegas. Automobile manufacturers, what do you do with Tesla? If you don't subscribe to the Gilmo report, you're missing out on some great commentary twice a week and then some weekly videos. Gil did an overlay of Tesla and GM back from the 20s or so, and it's uncanny how the growth in the stock was just like GM. And if you follow what happened to GM, there's a lot of room left in Tesla. I don't talk much about $200 stocks because most people aren't going to be buying a lot of them. A leader, it's going to be profitable soon. China's a big deal. They had a setback this week where their X cards delayed a year. Lot to love here. I can tell you down in Florida, everybody has them. I just wish I had a place in my condo that I could charge them, but I don't have that for now. GM, kind of bottom fish there, probably not too interested. Anything else before we see? That was the top 10, I think. Casino gaming, I mean, the name here is Wynn, but I think MGM looks interesting, and I made a great call on this Century, but maybe it's run too much. Wynn continues to be a big power move here, but it's near the top. Everything is green. It's a Macau play. It's a pocket pivot. It's a mobile breakout. Wynn has looked good for quite some time. MGM is a little bit closer to its moving averages and less extended, but extended as well. It's got some great earnings coming into the stock. Nice uptrend. Not actually has the earnings to I think, coming to support that. I made a call on this guy 2 weeks ago, or 3 weeks ago. It's coming off the 50 here. It's had a nice move, pulled back to the 17. It makes money. Might still be reasonable. Other things that I saw when I was looking at this list is home builders also making their way back up. You notice we haven't seen any energy plays. We haven't seen any of the gold miners. They've had a tougher week, even though the fact that they've held their own. But it's something where George and I looked at, in New York and looked like they were coming back, and they did. Toll Brothers is one of my favorites and one of my holdings, and you can see it's a junky chart here. It's not tight at all. But on huge volume and a pocket pivot on Friday, it broke to new recent highs. Everything is green. Had a mobile breakup from the squeeze on Thursday. Look at that earnings per share growth. Pulte, another of the big ones. Same type of pattern, closer to its moving averages. Not quite as much excitement from the earnings per share growth. Lennar, similar story, breaking out. So I think home builders look good. So what we didn't see here was finance. We didn't see much in energy. Didn't see much in retail apparel. Didn't see anything in shoes. And some of them do come in down here, but sometimes this is as important not to what we see, but what we don't see. On the downside, semiconductors, healthcare equipment, aluminum, coal, oil and gas, equipment and services, exploration and production. As I said, energy didn't make it to the list. A couple things before I say goodnight. I always like to look at my scorecard index. Well, actually, let's look at the warehouse of all securities, and we'll go from there before I say what I like to do. So in the all securities view, what I traditionally do is I go into, what I like to do for my own is I look at scorecard. And scorecard basically is a combination of technical and fundamental. And I like to look at the ones that are on top. Here's one of my favorites that didn't come up yet, which is Horizon, which I'm also in. You can see Horizon went vertical at the end of the week. A small pharma company like the other pharma biotechs, just in a big move, pocket pivot on Thursday. Everything is green. I like this chart a lot. There's your Jazz. There's Spirit. All right, so one thing you can do is use scorecard no index. I often go up to Woodward and Brown. This would be in the classic strategies, top-down investing, archives, and then I go into where did it go? All right, well, here it is. Reference library. These are all the different views from over the years. Way too many, and that's why it's harder to find them because they're slowly taking them out. Miscellany is Sprinter one step with Bondos. This gives me the top 125 stocks or so. And if you look at these, the Myriad we looked at, Biogen we looked at, Rite Aid we looked at, Activist we looked at. These are the same best stocks that you could do in a simple screen. And what's new and special, what you'll get when my add-on comes out, is how would you like to know which stocks, and get the right place here. First thing is, how would you like to know which stocks have above 2 and 150, which is what I trade, within 2% of the 50 days. So these are an uptrend that pull back to the 50. They're within 2%, and they had a kahuna force. So let's just look at a couple of these and see what we're looking at. These should be stocks in an uptrend that have pulled back hard and then got some momentum. Uptrend, pullback, momentum, kahuna, and volume. So I'm looking for pullbacks and uptrends. Here's one we already saw. Pullback, big move on Friday, got above the 50. Louisiana Pacific, doesn't look like much here. Let's skip that. FedEx, interesting story here. I actually put this on my list of things that would be interesting this week. Uptrend, pullback, it's now within 2% of the 50, and a mobile breakout and a squeeze and a kahuna. So what I've done, and this will be coming out in my add-ons, is I created a set of views and filters that tries to identify stocks and uptrends that are pulled back to the 50, which is great support, and then have a kahuna. Now, how would you like to know which stocks are squeezing? So 842 stocks are squeezing. How about stocks that are squeezing that have a MOBO breakout from a squeeze? So these are the 78 stocks that you'll be able to use these new tools to identify. So these should all have, here's my chart, the mustard and I was supposed to, I hit the wrong one and give you a break. I gave you a breakdown, so we can't do that. So let's go squeeze and a mobile breakout. There's 87, and let's just take a look at what we find here. I'm just trying to find tools through HGSI that enable me to find the best of the best and not look at 500 charts every weekend. Beautiful chart in an uptrend. This is ISIS. We talked about it early. Mobile breakout from a squeeze, top on my list. KB Homes, sideways, mobile breakout from a squeeze. Puma Biotech, this is a big price biotech, so I skipped it. Pulled back to support, moved up, lateral movement, pocket pivot, Kahuna, mobile breakout from a squeeze. So what I've done is I came up with tools that will be able to take your 8,000 stocks and bring them down to the things that we look at. Last thing, I'm not going to go through the GIF. I'm going to show you my top 30 and go through them very quickly, which is my group inclusion filter report all-stars. So let's just put them under scorecard no index, which is my basic. And the reason why I use this is I move my earnings date so I can see that Bid Auto still has their earnings in March, Amira Natural Foods and Salix still in February, and Questcor and Jazz, the rest of them, Jazz, I got to be careful with that, their earnings are already out. So let's just go very quickly and make comments about the ones that we haven't seen before, and then we're going to say goodnight. Regeneron, lower left, upper right, this is a monster in the drug and biotech space. Some great products. It's an expensive stock, heavily tied to Sanofi. Great company, probably a buyout candidate as well. Sort of a not really tight chart formation. Jazz, you know I love this one at all-time high. Biogen, love this one. Lanet, this is the drug distributor that had a huge move up, Bible gap up on earnings. Sold off hard on Friday. My guess is nothing's changed here. It's profit taking. Look at the earnings per share growth up here. Might be one to watch if it turns around. Aspen Technology, a consulting company, everything is green, pocket pivot. When do you buy stocks that have had big runs that are extended? You buy them when they give you a pocket pivot, viable add-on buy, and that might be what we saw on Friday. Alexion, another powerhouse biotech in a big run, a little bit of a flag, wants to run again. TAL Education, this is one of the Chinese education companies. As a group, the education company has been hammered. The Chinese ones have been stronger. Strayer had some earnings surprise this week, and maybe that's going to wake up the group. Spirit, we've already looked at. Questcor is one of these biotech stocks that I own, and I get nervous every day about what news is going to come out from the shorts. And you can see the shorts have hammered it multiple times in the past, and it's just a matter of time before the shorts come out again. The reason they hammer it is they've got a limited portfolio of drugs. They mark up the price substantially from when they bought the drug, and the system we live in allows them to do that, and frankly, they're not breaking any rules. And either competition or reimbursement changes or fighting from the pharmacy benefit managers are what causes the risk and the volatility in the stock. Again, they're doing nothing wrong. That's just our system. Activist, Hill Watson, what a run. We've already talked about it. Here's one of these stocks that I don't get. This is Data. Tableau Software doesn't make any money. Its revenue is less than $400 million a year, yet it trades at 100, and it has a market cap of $5 billion, $6 billion. I don't get this one. PE of over 1,600. But this is a momentum play. You have to pinch your nose and not look at anything else and say, breaking out the pocket pivot, everything is green. Buy. Not for me. Ubiquity, we talked about this already. When Resorts, we talked about it. Here's a paper company. Great earnings per share breaking out here. Everything is green. Capstone. China Distance Education, DL, they had a nice earnings report this week. Another one of the Chinese education stocks that seems to be in good shape. Salix, we talked about already. YY, the Chinese real estate internet company, lower left, upper right. It's been a little bit volatile up here. Earnings are not out yet. Everything is green. It'd be interesting to see what this one does. Qihu, love this stock. What a huge basing from August until middle of January. Now in a nice run. Makes money with some great earnings per share growth. A leader. Amber Natural Foods, I passed shooting star here, and earnings are coming out this week. Synaptics, a little bit extended. They make the mouse pad in all your computers. Talked about it in the past. Under Armour, first you had the controversy about the suits, and then they signed an 8-year agreement. In a big run, makes money. Do your research. It's a lot extended. MPEL is a pure Macau-based casino. I didn't talk about it earlier. It's one of my holdings. Its earnings are slowing down, heavily tied to the Chinese and Macau economy. Harmony International, they make these car stereos, high-end stereos for cars and other for home, and they're on a huge run driven by the automobile industry and its recovery. Probably goes to 130, 140. Facebook, didn't mention it earlier because we always do. I'm strong on it here. We're in sort of a big power move up to 72. Priceline we've looked at already, great stock. Clearfield we haven't looked at. Telephone and telegraph apparatus. So it's a fiber company. $400 million market cap, too small for my taste, I would pass. But saying that, you might want to look at it because lower left, upper right, and a ton of volume coming into the chart. Had a kahuna on Friday. Everything is green up top. Michael Kors, breakaway leader, just destroyed Coach. Looks a little tired here, but it's been a big leader. United Rentals, like Manitowoc, they provide a lot of the equipment for the companies that are involved in the mining industry. Huge run up here for them as well. Everything is turning green. Big run up, Bit Auto waiting for earnings. Chinese internet play. Retail Mont, this is another one of those stocks. This is an IPO. It's taken out its high from the initial run up, which is now time to consider buying it. Makes money. They are a competitor of Groupon. Do your research. It's not cheap, and that's it. So I've looked at my traditional market review, of which I think the market is at a point where we should be aware at minimum. We have done my top-down investing, where we identify pharma and biotech as being the leaders. We also looked at several of the shortcuts that I use, whether it's scorecard views, sprinter views, GIF. And I tried to give you a little bit of a tease in a nice way of showing you what's coming with the views and filters that I've created to use with the mobile breakout. So look forward to seeing everybody soon in Palos Verdes. And at this point, I'm going to go ahead and stop the recording and say good night. Good night, everybody.